Zella here again for Small Business Digest. We have with us an entrepreneur extraordinaire, and if I'm not mistaken, he's Ethan Drower. He's here calling us from Argentina, but he's been all over the world. And I think his product is really in Europe, if I'm not mistaken. Am I correct, Ethan?
Correct.
So, Ethan, uh, there's a lot of questions I have, but I'll start by asking a little bit about your personal background, then about your company, and finally a website where people can hear more.
Sure, no problem. So I'm Ethan Drower. I am a co-founder of Site Medical. We call it Site Med for short. I am a trained software engineer, and I've been in the software space for a little bit over 10 years now, and have worked in a lot of different industries, ranging from finance, high frequency trading, to consumer app type of development. So I've kind of run the gamut. My current venture and my longest standing venture has been SiteMed, and we are in the medical device space. We're in the regulatory affairs in Europe world. So it's quite a specific niche. But as for myself personally, it's always been the software end of things, the engineering, the building side, and always just trying to find the juiciest problem possible to tackle. So our website, Don, I think that's the last thing I'm missing, is sitemedical.com. So CITE medical.com. That's it. That's me.
Okay. Well, what specifically? You say artificial limb, et cetera. What do you mean? What does your company do?
In short, we help medical device manufacturers prove that their products are safe to sell in Europe. And the way that we do that is we help them by either compiling big research reports. So we do research of existing studies, previously done reports on devices. And what we do is help them compile them into submissions that they send to effectively the government in the European Union. And that's how they get their devices approved as safe to sell. So that's the gist of what we do.
So some things like artificial limbs and things like that, or artificial fingers. Is that what you're talking about?
What's interesting, Don, is that it's any medical device. So we're talking a robotic surgical arm all the way down to a Q-tip or a hospital gown. Those all have to have a certain level of scrutiny when it comes to their safety. So we get to touch a whole wide range of complexities in products and different devices.
Well, just out of curiosity, why are you in Argentina on vacation, or
one of the nice things about our team and the way that we've structured our company, we have people all over the world. So we work across 3 or 4 different time zones pretty seamlessly. And we gave up our office during the pandemic because nobody wanted to go there. So I encourage the team and I myself to take advantage of our location freedom and go see the world while we build this thing. Why not?
Okay, sounds like fun. But now you're on this show because you said an interesting thing about what should an entrepreneur be or look for, and I'm always curious about that, and so that's why you're on the program today. Tell us your thoughts on this.
Sure. Well, let's just kind of go one by one because I have a few core tenets, I guess, of entrepreneurship that I have given out as advice, written some articles on, and I guess that's probably how you caught on. The first one the first big quality I look for in fellow entrepreneurs and try to cultivate in myself is a high risk tolerance, is what I call it. Because what you're really doing when you start a company is you're assuming a ton of personal, either financial or even more importantly, time risk. And the idea is to build something that is at such a high scale that it can pay you back 100-fold, 1,000-fold for what you've invested. And you're constantly in a state of not knowing what the future holds. And you're in a state of continuous reevaluation of what we call the level of risk in your business, in your marketplace. And if you want to be successful in this game, because it is a game, you need to be comfortable with that constant level of uncertainty. And you need to understand that the risks that you're taking are leveraged risks, right? And that's why we do it, because we want the big payoff. We want the pot of gold at the end of the rainbow, the exit, or the big scaled up version of whatever you started. So I think that's a critical one.
Keep going, and the floor is yours.
Okay, I'll keep going. I wasn't sure if you had if you were going to debate me on this here, Don.
No,
let's keep going.
No, the people are here to hear you, not me.
Okay, perfect. Then I'll keep rolling. So the second one, and this one I often get a lot of pushback on from other founders who are engineers or are software developers. And this is, we have a big emphasis on the ability to sell what you have built, sell people on your idea or sell your actual product. Now, this is something when you're a creative person or you're an engineer and you really love and derive a lot of satisfaction from building your thing, your widget, your software, whatever, you tend to be of the mindset where you think as long as you build something exceptional, people are just going to beat down your door and buy your product, buy your service, because they're going to see how hard you've worked and see how good it is. And I've found over my career that every time I do that, we lose. And you have to cultivate a sales savvy. You have to acknowledge and work on the art of persuasion. And it's just as important as the actual thing that you're building. If you can't convince somebody to even look at what you're doing, it doesn't matter how good it is. It's not, people are not going to beat the path to your door. So one thing that I often, have difficult conversations with if I advise other entrepreneurs is, yeah, the idea is great, but you need to learn how to sell it. You need to learn how to pitch VCs, or you need to learn how to speak to your potential customers and your potential market. And yeah, I can't emphasize it enough. So that's number two. Moving along, this is a kind of a softer skill here. And this one is, I would say, equally as important in selling. They kind of go hand in hand. So what I always try to cultivate in myself and anybody that I'm advising is focus on having extreme empathy. Empathy is number 3, because you need to have a genuine thirst for knowledge when it comes to your customers and your potential market's experience. You need to get inside their heads. You need to care about their problems, and you need to obviously identify them. And the only way to do that is to truly be empathetic. You cannot win in the long term as kind of an opportunistic fly-by-night operation. You need to truly spend the time with your target customers and your target market, and you need to ask questions and you need to listen. Without it, you'll never write good marketing copy. You'll never incorporate the feedback into to change and improve your product. And you won't be able to iterate to a point where you have a more refined pitch and product, right? The elusive product market fit, which is what we're all in this game for. We want the right market. We want the right product for that market. The only way to do that is to listen to these people, because whether they tell it to you directly or they tell it to you through explaining their problems, they are communicating the solution that they will pay for and the solution that will motivate them to buy. So that is absolutely essential, empathy. Moving along, number 4, I believe we're on, is this is a pretty cliche one, but I put it on here because I still think it's incredibly important. You need a resilience to rejection, and rejection can come in many forms. We tend to equate it with the failure of a company, but what I'm talking about are the day in and day out micro rejections that you're going to face. You need to be able to pick up the phone and call a stranger and pitch them your idea and have them and be okay with them saying, oh, no, I don't want that. Don't ever call me again. You need to be able to spend a bunch of money and try a new marketing campaign and have it completely flop. But you hopefully can learn something from the data, right? A lot of times when an entrepreneur gets a little bit of success done, they start to feel like a winner, and their friends and family know them as a winner, somebody who's getting stuff done. And when they start to feel like that, they become risk averse and they become afraid to take the bigger shot, because they're getting that bit of validation, they're getting that bit of notoriety, a couple publications saying this guy's great. And that's one of the reasons I always try and reference a lot of my past failures when I do any kind of media, because it's so important to be of the mindset of it's okay to try something and miss the target completely. And if you're not doing that, it means you're not moving fast enough with your product, with your company. So to all everybody out there that's listening, take the feedback. The feedback is what matters. The result, pass or fail, success or nothing, doesn't matter as much. Seek the feedback in everything that you do, and eventually there's going to be more wins than losses, because you're going to continue to learn, continue to refine your product, continue to get better. So resilience to rejection, number 4. And number 5, we'll keep it at 5. It's a nice number, is a still and calm mindset. And I'm not going to take you down the spiritual road here, Don, but I believe that as entrepreneurs, we can deal with an incredible amount of interruptions and stressors in our daily, our daily businesses, our daily lives. If you do not have the type of mindset where you can remove yourself from the current fire, the current issue at hand, and look objectively at the full board, the big picture, and make a decision, you're at a disadvantage to other entrepreneurs, because it's being able to, walk through the fire, as they say, and do it in a way that does not compromise your decision-making ability. So I guess that's what I'm getting at when I say a still mind. Don't be forever reactive to the small fires of the day, because they're always going to be there. So keep a calm mind, keep a focus on the long-term goals. And as long as you're progressing towards those goals, it's okay to have the little panics and let the little issues of day-to-day managing staff, you can let those slide. You don't have to get absolutely buried in resolving every single little conflict or problem, because they never go away. There is no day where you own a company and it's running without problems. It doesn't exist. So we need to learn how to deal with it. Yeah, that's number 5.
Wow, Ethan, that was 5 excellent presentation. Before we go further, your website again for our audience?
Sure. We are citemedical.com. So CITE, like citation, medical.com.
Okay. Well, you know, I was listening to it. I couldn't disagree with a single thing you said, but I'm going to ask a question. No, believe me, I've disagreed with people, but I guess my question is, how do you deal with people who backed you in one deal that failed? And do you go back to them and say, "Trust me again," or do you say they will never trust you again?
You go back to them, Don, because in my experience, those that have backed my previous ventures, win or lose, they are more interested in backing me personally than they are the specific venture. And I think those are the type of investors that you really want in your corner, because they see the potential of you as an entrepreneur, and they understand that no, not every idea can work out. It's not always a question of the founder failed, he broke the trust, he blew it. Most of the time when you run the companies, you did all you could do. You spent the money the way it was supposed to. You built the product the way it was supposed to, and the market didn't take what we wanted, right? There's not always a way to win if you're a better entrepreneur. So I say, if you approach your investors with that framework and you say, this is the idea, this is what we're trying to do, you're investing in the idea because you think you share my opinion of the probabilities, but it is a probability. So what they're really investing in is the entrepreneur themselves. Is this guy or girl going to do their best and take the best shot at this opportunity? And are they going to then learn and grow from it? Obviously, investors care about their returns. They're not going to be happy if you come back and say, well, at least I learned a lot, right? The return is what matters. Don't be mistaken. However, don't be ashamed to take the swing and miss and come back with another idea.
Well, let me ask you this. You've heard of vaporware. You know, it seems to me what I look at, I went to a presentation of 16 nascent firms a couple of months ago. And every one of them seemed to me to be vaporware in the sense of, yeah, maybe it'll work. But then you ask the critical question, has anybody bought it? And invariably the answer comes no. How do you answer when you think you have a good product, but so far you have no one who's said, yes, I agree with you?
So we're talking about selling something before it exists.
Or supposedly exists as a beta model. Every one of these companies supposedly had a beta or beyond. It was a New York City venture capital group. And at the end of the thing, I couldn't find the one company that really could demonstrate that they had something there.
Well, I would say that is not an industry that I have any interest in. That's not a sandbox I have any interest in playing in. I very firmly believe that you should be building the smallest functional piece of whatever it is that your idea is, and you should be showing it to everybody. It should be accessible. So that's how we run SiteMed, and that's how we've done all of our previous ventures. We build something, and then we go out and try and sell. We build the smallest thing possible, and we go out and try and sell it. And we sell it by giving it to the users. And based on their feedback, they like it, they don't use it, they love it, whatever. we change, right? We iterate. So I would argue that as an investor in this day and age, you shouldn't be taking risks on things that they haven't even built a sliver of what it is. There's no need for it. It's cheap to build. It's cheap to build demos. It's cheap to build betas nowadays. It's not $1 million investment to come up with a piece of code that you can put online that works for somebody. So if I was running a fund and I was investing in these small companies, we would say, show me something, and I want to see it live, and I want to be able to use it and play with it. I don't care if it's pretty, but you have to show me something. So I'm not interested in okay, we'll build the whole thing in a year. We'll see you then. Thanks for the check. We're interested in micro opportunities, micro bits of functionality that can then be brought out to the marketplace and tested.
Let me now throw a curve question at you, which you don't have to answer. Why is it that men seem to be able to more easily get capital in this entrepreneurial world than women?
Ooh, a controversial question.
Yes.
I like it. I like it, Don. Let's do it. I would say, and these questions are so difficult because you're generalizing men and women, and there's so many different types of each personality within each gender. Okay, but the key trait, and the key trait is not male female. The key trait is ego and agreeableness. And what I've seen in my experience, and I've hired a lot of people, is that those who demonstrate an extreme level of self-assuredness and confidence beyond their actual abilities or experience raise more money, because they're willing to go out there and say, yeah, we can do this. Those who are a little bit more introspective and a little bit more cautious with their words and actions and thoughts, they raise less money because they don't feel that they're ready yet. They don't feel that they deserve $5 million. Okay. And if you really do the numbers and you break down these traits across men and women, ego and disagreeableness are more predominantly male traits. So I would say that the reason is why men go out there and raise more money is because the vast majority of men that are raising money have more self-confidence and a little bit bordering on delusion when it comes to their abilities and their experience. And those men and women that do not have that self-assuredness, they raise less money, mostly because they ask for less. And they don't have the unshakable self-belief that they're going to be fine, even if they haven't done it before, even if they don't have an exit, whatever, they're going to be okay. So it's that trait. It's not man, woman, but when you really break it down across both genders, there are more men out there that think they're much better than there are women. And that you actually can support statistically. So I guess that's how I'd answer that.
Okay, but that's the best answer I've had in a long time. I like it. Unfortunately, we're coming to the end of our time. First off, your website again, and finally, what would you like to leave our audience with?
Sure. So our website, one more time, is Cite Medical, so CITE medicals.com. If you haven't clicked it by now, you probably never will. That's okay. We hope you enjoyed the episode. What I would want to leave everybody with as an entrepreneur is it's kind of the summation of these things. Take the feedback that comes to you when you're starting businesses, when you're meeting people, when you're selling, when you're raising money. Take all of that feedback in, but at the end of the day, you're going to have to make the decisions for yourself. And there will come moments when you're going to have to go against what a lot of the feedback and what the crowd has said and done. So it's kind of that be true to yourself, but with the caveat of you still need to get all that feedback. You can choose to ignore it for the bigger picture, for the bigger gamble, the bigger payoff, but choose for yourself. Always choose for yourself. Just do it from a position of being well informed.
Ethan Drower, thank you so much for being with us today. It was really a terrific time.